Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, a full week of June, the first full week of June, in which we have a lot of movement. We got the CPI, we got the FOMC interest decision, the economic projections, and also PPI. And we were ending the week in a high note, breaking all-time highs again. And this has been happening again and again and again. And I have some charts, some ratios that would be of your interest, because looks like the same three are pushing this market up, but not the Magnificen-7, the Magnificen-3. And also we are seeing weakness in breadth. Small caps are weakening more and more. Financials are weakening more and more. And looks like there's a lot of concentration in this market. And that's really an issue. So let me first go through, as always in these weekly recaps, to go through the economic data, and then we are going to move into the charts to perform technical analysis in all markets. So first, real quick, Wednesday was CPI big day, in which we surprised to the downside in both month-over-month, year-over-year, core, and also on the headline inflation in both ends. So all these was really a tick in the right direction for inflation, and you can see my detailed analysis in my Thursday videos that I'm going to share up into the right corner. So if you want the detailed analysis, go there, and also coupled with the fact that economic projections are also included in that video. They are a little bit hawkish, less cuts than expected. So you can see in the FedWatch tool that we were waiting for the FOMC. Jerome Powell said that there's going to be at least one cut, but probably no more than that. But markets are not trusting that. Look at this, 61% of probability for interest rate cut as soon as September. And then they are pricing in also another one in December. So 2 rate cuts looks a little bit more dovish than what the Jerome Powell and FOMC are projecting in their reports. So we'll have to see what happens there, but markets sometimes are ahead of themselves. So we have to really take care of those expectations. On Thursday, we got the PPI that also was a boost in the right direction for inflation. Look at this, decrease into the negative in the PPI month over month, and core PPI month over month at 0%. So another set of winners for inflation. Also, initial jobless claims came higher than expected, 2.242. We were expecting a little bit lower than 229, the previous one. And finally, on Friday, we got the consumer sentiment. And I think that's something that market ignored, but we have to really see. Let me just change this to see all the data on Friday, because look at this. We got the consumer sentiment lower from 69 to 65, and we were expecting 72. So that's a miss. 5-year inflation expectations were higher. That's also a miss. And inflation expectations overall, flat. I mean, that's not a winner either. So that's also a miss. And consumer expectations preliminary are lower than expected, also a miss. Obviously, these are preliminary numbers for June, for the current month, but this is showing you something that we have to really take into account. When consumer sentiment is lowering like it is doing, when the inflation expectations for right now, short term, and also for the 5-year inflation expectations are higher than market is expecting, consumer is really feeling the pressure, and we are going to see less spending. So prices will need to go down, and that will affect growth and the stock market. But looks like the market is ignoring all this. So why? Because of AI FOMO. AI is the mother of all, which is pushing this market higher, and all this, it's being caused based on 3 stocks: Apple, Microsoft, and Nvidia. These 3 we are going to see that into the charts. These 3 are the ones that are really pushing this market higher. If we compare the performance on the daily between Apple, Microsoft, and Nvidia compared with the rest of the Magnificent Seven, Tesla, Amazon, Google, and Meta. Let me just show you again. If we compare, show you the watermark. If we compare basically Apple, Microsoft, and Nvidia, compare with these, the rest of the Magnificent Seven, so three stocks, we can see the ratio and we can see the push on AI here. We can see this, and there's a lot of concentration in this market because XLF financials are really struggling. If we compare XLF sector with XLK technology, look at this weakness. Weakness in financials compared to technology. We are also seeing the Russell, look at these 3 days. So even though we are seeing this weakness in the rest of the market, only 3 stocks are pushing all-time highs again in the Nasdaq. We are continually seeing this market being pushed up by AI, by investors on Apple, Microsoft, Nvidia. So there's nothing that is going to cause this market to go down unless there's something really huge. And that's an issue because there's a lot of concentration of money into only 3 stocks, but the overall market, it's not healthy. We can see here that the market did a new all-time highs again on Friday with a candle of indecision on Thursday and then a big push there. But at the same time, we are not seeing a lot of volume there. We saw a lot of volume here in the first consolidation, and I told you we are going to see most probably near 20,000 in the coming weeks. And there's the point of control here for this volume starting on this range. So we are pushing strong. And since the last pivot on April, we can see also that the point of control is in this zone down here. So volume, it's there. It's basically supporting the price action. But on smaller time frames, we are seeing a lot of chop, a lot of indecision into this move because the broad market, the rest of the market, not only the rest of the Magnificent-7, but the S&P 593 stocks are not following suit. Because we can see, let me just review the Apple and the big tech guys' performance. Look at this move from Apple. Since the WW Developers Conference, we've been seeing Apple really skyrocketing. It pushed 13%, it pulled back a bit, but it's 9% in 1 week. Unfucking believable. Microsoft, it's pushing all-time highs. Look at these bullish candles. Tesla, it's really struggling after Elon Musk secured the stakeholders vote for the 56 billion absurd package compensation. But Amazon is also struggling below the point in which I would like to see a push to all-time highs. Google, an AI play, also it's consolidating. It's not the same performance as Nvidia, which is pushing again all-time highs. This market, it's basically Microsoft, Apple, and Nvidia. You can see, I told you, this is unfucking believable. This concentration is really affecting the rest of the market because if we check the equal weighted ETF S&P 500, we can see that we made a lower high down here in early May. And we've been going lower. We made also 3 days of not following the Nasdaq performance. And more than that, look at the percentage of stocks above their moving average. In terms of momentum, we are in a downtrend and we are losing momentum. Same for the 50 moving average. The percentage of stocks that are above the 50 moving averages decreased by 13% and it's only 36%. This is not showing a good trend in the equal weighted market, in the overall market. And for long-term investors, there's no holding of the 200 moving average. Only 50% of stocks are above the 50 moving average. So we are seeing a lot of weakness under hood, under the hood. Excuse me. So financials are also struggling. Dollar, it's something is the I think dollar is the elephant in the room. Look at this big push. It took liquidity in both sides. And this is, let me just show you something. This was the candle on CPI, or non-farm payroll, excuse me. Then we got the CPI move. And then we got the PPI move. What is this? Dollar is strengthening a lot. This is a divergence with the stock market. Dollar is pushing this way on the week. Look at this week. We held 0.56% and we are seeing an uptrend. And this kind of pattern may push dollar to 107 plus. And there's no way we can see a strong dollar without weakness in the equities. So there's another divergence here. So be careful, because in this market, dollar is pushing, yields are consolidation consolidating in this range. Obviously, the CPI is not going to provide a lot of push. Yields are not pushing, but are still at 4.7. And look at these highs. This is the 2-year yield. And the 10-year yield, it's also consolidating lower at 4.2. So the inverted yield curve, it's actually going worse. We are moving in the wrong direction instead of an inverting. Remember that when we approach zero, the uninversion will formally and officially call recession. And until then, we are still seeing the 2-year yield pushing higher than the 10-year yield. We are still in a situation in which we are battling inflation, but at the same time, we are pushing and pouring money into this market. Gold push 1.30, safe haven. Copper also trying to hold this flash. Silver 1.26% on Friday. And crude oil, it's pushing since late last week. This is interesting because I got this daily inverse fair value gap, I got this 1 hour and this pivot. And crude oil just went straight through all this. And if this was a lower time frame, like 1 hour or 30 minutes, I would be super bullish. When you have so much resistance and imbalances and just the price action goes through that and holds in an ascending pattern, this is really bullish. So I'm going to remove this and I'm going to focus on where the energy sector and where crude oil is going to hold, because this is going to provide a boost again to the inflation battle. And this is not good. This is another elephant in the room. So we have crude oil still in a downtrend, but we saw a nice V reversal at a key level like was the 77 level. So overall, quite concerning markets. Let me just try to remove this because the price act. Oh, let me just show you my trade, because my trade was, remember on Friday when we were dumping after the UK Open due to the France uncertainty and political unrest in Europe. And look at this beautiful setup. We got an S&T here, so higher low for the Nasdaq and lower low on the S&P. So that's bullish for the Nasdaq. So I was just trying to find an entry, and right after the S&T is this dashed line, we got the manipulation move into a fair value gap, and I got the entry here, the stop, the low of the candle. As always, I always have the same setup. This is my A+ setup, and I was just after this sell-off, I was just concerned about, okay, let me just take a scalp. 38 points, it was 700 something, and it was quite immediate. I was a little bit concerned about continuation lower and then continue higher, but look at the open. The open was really struggling, and then we just push a new low here and then started to open up. In higher time frames, in the 30-minute chart, we can see that we dropped a lot. We took liquidity. Let me just clean this. We never took this pivot because the SMT, I'm going to leave that there. We made a new all-time highs in regular trading hours, and the previous all-time high was this one. So with this setup in mind, again, this is a tricky market. I don't want to buy all-time highs up here. And the worst part of this setup is that I don't have any fair value gap in here, in this move higher. I have only the same fair value gap that I got on Friday. So if we retest this, I'm not going to buy this. Because if we retest this lower, most probably is that we are going to reject all-time highs and leave a nasty candle at the top. So these kind of candles at the top are not good, are a signal of reverse sentiment. And I'm going to remove this 15-minute fair value gap. I'm going to leave this liquidity that we never took down here. And I'm going to focus on the CPI move, this move. And this CPI move on the 1 hour is pretty interesting because we have this pivot, and on the 15 it's also quite interesting. So we have this pivot, we have this liquidity down here, and we basically have, let me just extend this sell side liquidity. We have a lot of points of interest down here. So I'm going to be patient. I'm going to wait more than ever for a pullback. And this pullback is going to not be quite bullish. So I'm waiting for more weakness to come based on what I told you earlier about the dollar and yields pushing, the small caps suffering, and the RSP and the breadth really weakening. This market is only pushed up by 3 stocks, and that's quite weak. We can lose momentum in a snap and then start seeing lower highs in lower time frames. So that's why this kind of setup down here would be quite concerning. I would like for the market to really clear this and try to find a bottom, but I'm quite concerned about the weakness on this push. You cannot just have a new all-time highs with this price action. Price action is showing you weakness. So this is my only levels. I don't know what I would do when I see price action at these levels, but these are the same levels that I got for Friday. Friday was not giving me the amount of pullback that I wanted. We only got this pullback, but we never took liquidity. So I'm still quite concerned about the fact that we are not clearing the imbalances below. And that coupled with the fact with the weakness overall and the breadth and momentum slowing down, this is quite concerning. So next week is going to be a challenge. Next week, we need to be patient and to really be disciplined, to not buy all-time highs, not just close our eyes, buy, trying to push this market to 20,000 up here. 20,000, it's since the close is at 1.54. In one day, we can reach that, but I won't be the one buying that and holding the bag for this huge pullback that I think it's coming, because I'm seeing weakness under the hood. I'm seeing warning signs in other parts of the markets, and this AI push is more and more weakening. So be really careful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single Saturday for weekly recaps and every single trading day from Monday through Friday for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the Friday was kind of weak. We are showing, I show you why I'm quite concerned about this price action. So do your own due diligence, do your own analysis, rest on the weekend, and be prepared for next week because it's going to be a really challenging week. Stay safe, have a nice weekend, and see you on Monday.